Hello, I'm Richard Hunter, Head of Markets at Interactive Investor, and welcome to our look ahead to Tuesday, the 14th of April, another 4-day week after Easter Monday. This week's 4-day week has actually been quite a good one for markets. There have been various signs around Europe and even in the US to some extent that the coronavirus could be coming into a plateau situation. It's certainly something that has energised investors. If you look at the Dow Jones, the S&P 500 and the Nasdaq this week, they're all up between 10.5%. Indeed, the FTSE 100 has also had a good few days, being up 7% this week. Nonetheless, there remains a long way to go. We look at the normal year-to-date figures, of course. The Dow Jones in the year-to-date is down 18%, S&P 500 15%, Nasdaq down 10%, and the FTSE 100 still down 23%. A couple of things to bear in mind going into next week, quite apart from any progress that might be made on the coronavirus front. Number one is the oil price. This has obviously seen a sharp decline in the year. It's down around 49%. Brent oil is somewhere around $34 a barrel, which is a slight improvement to where we were this time last week. What's happened here, of course, is that it's the old question of demand and supply. We've seen demand destruction. Airlines, for example, have no requirement for fuel at this current moment in time. On the supply side, that continues apace. And in fact, it's getting to the stage where there's less and less place to actually store the oil that isn't being used. This means it's exceptionally important that when and if Russia, OPEC and Saudi Arabia get together, they can come to some sort of arrangement. The reason to mention the oil price at this particular moment in time is we see another swathe of companies deciding to defer, postpone or cancel their dividends, because two of the income providers in terms of the oil majors, BP and Shell, have announced swinging cost cuts as a result of the decline in the oil price. But as yet, it's notable by its absence that neither of those companies have actually mentioned a dividend cut. And that's with some reason. Income investors obviously being starved at the moment, whereas BP at the moment currently yielding about 9.5%, Shell 9.8%. So very much two companies to keep an eye on for any mention of the dividend over the following days. Equally, another point of interest, we're going to be coming into the first quarter earnings season. It hasn't started proper yet, and we know it's going to be ugly. And perhaps a couple of early indications in terms of trading updates have come from the likes of McDonald's, who have reported global sales declining 22% in March, and Starbucks, who have already said that in terms of their second quarter earnings, they're forecasting a 47% drop in earnings for that period. So clearly the next few weeks are going to be difficult in terms of the earnings reports we're going to be getting, and it'll be interesting to see how the markets react accordingly. Thank you for watching. Have a great week.